Hey, hello everybody, it's Greg. Today I'm going to show you one of the ways that we use this software that Dan and I use to find plays every single day. And whether that's in the green room or one of the newsletters, this is the starting point. Now, I have different layouts. Today I'm going to show you one that has different pages set up with the stocks within the same sector on the same page. Now, the one that we're looking at right now has a lot of different scans within the columns that you can sort these. So sometimes I show you a page that has many different scans that are in little boxes, if you will, with tabs, and you click on it and it finds that particular scan no matter what's out there. There are price and volume filters because I don't want anything low priced or anything that's no volume. And this list that it's looking for is a general list. You can look on the bottom here. There's 883 stocks in here. Depending on if there's new issues, if there are new active issues or less active issues, this filter is going to adjust stocks, meaning there might be 700 at one time, there might be 1,000 at one time, but give or take, it's probably going to be around 1,000 stocks, more or less. Now, what we could do here is look for what's strong on the day, what's strong on the week, what's gapping, what's showing relative strength. So I've got this sorted by 5-day relative strength here, and you come up with a stock. Now, I have within the column here the symbol, the name, the industry that it's in, and then when is it going to report earnings. So sometimes in this list I might sort this by earnings date and just see what's going to be reporting earnings. So this one is already done, and you just scroll down and you see, so for example, what's going to report earnings this week. And we have this biotech stock, this restaurant, which is doing very, very well. And as you come to that, you can see different pieces of information here where it had a volume spike in the last 3 days. There was a bullish wide range bar. There was a breakout. It's moving higher. The ADX, why would I want ADX? We're not indicator trading people. You don't see any indicators on the bottom of the chart. However, when I want to find something that's extended, potentially extended, when things are over 60, they're getting extended. Now, that doesn't mean I want to short it. Typically means I'm not going to want to go long, but it may be topping out, and I can look for continuation patterns. So sometimes, things that are extended, you find continuation patterns or are ready to break out. You don't know. But this is putting us in the ballpark of what we're looking for. Range expansion, bullish 180s. So not only is it a 180, meaning a red bar and a green bar, the bars are going to be wider. So this is moving up. It broke down. It recovered. It retraced all the way back up again. Could it go higher? Well, I got a weekly chart down here. It looks like something that could break out. So we can keep an eye on it. We can put it in a list by clicking that. Others, you can see it's putting us in the ballpark of what we want to look for. Maybe it's touching the moving averages. If it's touching the 20 MA and the 50 MA. No, that's a starting point. This is wide and whippy. It's a big reversal. I'm really not interested in this at this moment because it's too erratic, but I can set an alert and just see what it's going to do. Right, that's broke down under the 50, down under the 50. This one's reversing. So, you get the idea what we're looking for here. Bottoming tail bars and topping tail bars. You just click it and you sort it, and it finds your bottoming tail bar. Want to find a topping tail bar. All right, topping tail bar. Now, topping bars are not strategies. Again, so it's just telling me that there's a particular bar there that may be of interest. Okay, here's one that gapped lower. It retraced into resistance. It may be ready to roll over. It's not ready just yet, but I can put it on an interest list and then come back to it. All right, breakouts, again, stocks breaking out and so on. Now, you can make different tabs here and put different stocks. So these are big cap stocks. Everybody's focused on these: Google, NVIDIA, Adobe, and so on. So MRVL, started moving up. Semiconductors are hot. This looks like it can continue to go up. Advanced micro devices, not really ready for prime time yet, but maybe bottoming pattern. 180 type of reversal. Oracle, a little whippy there, but you get the idea. Big caps. Now, as we go through these, Dow stocks. Now, the charts are smaller. You can decide what you want to put in here, but I'm looking for these, just quickly clicking these tabs, looking for something that catches my eye, that might be ready to reverse or go down. The end of last week was erratic, but Procter & Gamble, so bearish 1, 2, 3, but it's in an uptrend. That might be ready to go down. JP Morgan, it was news that the CEO might be thinking about retiring. It whipped down that day. It's recovering. I might be looking for this as an intraday trade since it's bottomed out here. So I could then go, if I wanted to, and flip this to an intraday chart and see if it's basing, if it's ready to break out or not. So there's lots of different strategies that we can go to once you become acclimated to what we teach here at Master Trader and the strategies that we use. All right, let me go back to daily charts. And so now I can go down to, click another one, and look at other stocks in the Dow or in the transports. And a lot of the transport stocks are either in bear markets or almost reaching bear market territory of being down 20%. It's not a good indication when FedEx is trending down and UPS is trending down, making new lows. Rails are going down. Not rails started to bounce back up again. Airlines are starting to roll over, as you can see. So a lot of the transports are deteriorating. Another 1, 2, 3 type of airline there. Truckers going down, and so on. Well, here's shipping and ports. That's doing well. That's in the transports. And so let's continue. So now I want to see financials. Maybe I looked at a list of ETFs, and financials maybe caught my eye. So I can here and just go and look at different financial stocks. Now, you have asset protection, you've got regional banks, you've got global banks, credit services, financial data. This is, we're mining, so to speak, looking for trade setups. Semiconductors, you got the idea. Looking for different patterns. What's strong? Marvell. I like Marvell. Looked at that before. I like to see unification or more stocks in the same sector that are doing well together. SMH is moving up, so it's a very strong sector. Software. Let's take a look. Software stocks. So looking around here, I see weak ones, I see strong ones. I'm looking for patterns. Around CrowdStrike is strong. It's going to report earnings next month. You can see I've got earnings dates in here. I can see the industry that it's in. I can see the trend. And let's continue. Another software tab. W-Day. Intuit. Stocks that software for running companies, employees, managing companies, or how they do business with employees or organization. Not doing well, possibly related to artificial intelligence and or the possibility, I think the probability that it's already happening, that the economy is slowing down. We already know people are getting laid off because we hear it reported in the news, but some jobs maybe are being taken over by artificial intelligence. So these stocks have been under pressure for a while. So again, other software stocks, again, just a quick way of clicking a tab and looking at what's strong. These are consumer staples, right? Things that you need, that you're going to buy. Maybe you'll buy less of in a recession, but these are things that you're going to need now. Something like CVS is going to be affected by what's happening in the healthcare industry, but people are smoking. Tobacco's still going up. People are buying Coca-Cola, Colgate, Palmolive, been doing well and starting to roll over again, and so on. So this is organizing your information to be able to find different stocks within sectors and just quickly being able to scan around, finding those patterns. And sometimes you're going to find so many, you just you can't deal with them all, meaning you can't take advantage of them all. Ross gapped up on earnings. This is one you're going to want to put in an interest list because gaps on earnings typically follow through after some consolidation. Lulu, that's been getting killed. Lululemon, that's been getting killed. Ralph Lauren gapped down and had a big reversal. So you start building your list for what you're interested in or not. What do we have here? Home furnishings, apparel stores, retailers. Again, looking around there. Oil and gas. So here you can see how we can find stocks within particular sectors. For example, if oil was rallying and we wanted to look for oil and gas stocks, we could just come in here. There are other ways to do it, but this is a way that I like to do it where I can see a whole bunch of charts at the same time. Right? It's visual, whereas I could bring up the sector, with the list of stocks in the ETF and click on them one by one, but this is just another way of doing it. Here we have gold stocks, aerospace and defense, and some gold stocks. Again, I'm not going to go through these, but you get the idea. I'm just clicking on each tab to show you, restaurants, copper, chemicals, packaging, steel, healthcare, and looking around. J&J breaking down, Merck, questionable, Pfizer. It's been in a downtrend for a long time. You can see I can just scroll that to look back there, but it's bottoming. Lilly, that's about the strongest, wouldn't you say? Here we have internet and information. Again, you can look around there. I'm sure you got the gist of everything. Regional banks, same idea. You can look at a particular ETF. So you could look at KRE and look at those regional bank ETFs within KRE just by coming to this tab. And then here's construction stocks. And a lot of them came in quite a bit. Interest rates moved up a little bit. And these came down quite a lot. So from an into-market analysis point of view, these coming down as much as they did by interest rates moving up a little bit, they're really sensitive, whereas in the past, they really weren't that sensitive at all. It's like, imagine giving someone a little push and they fell down and from a slight push, and that's an analogy that I would point out to here. It's like they got a slight push and they gave back. So they're very vulnerable at this point to what's happening in interest rates, and we have other pages with interest rates and intermarket analysis. So I hope this really helped you out how to organize your information. And if you're a student, you're a member with Master, we share layouts, we share scans. We're here to help you succeed and reach your financial goals. If you have any questions, email me, Greg at Master Trader, and you can email Dan at Master Trader. All the best.